This year, we are focusing on the insurance industry's outsized influence on the world's recovery, not just how we emerge from the pandemic, which has tragically claimed more than 4 million lives around the world, but also the historical catastrophes that have impacted the globe, the societal inequities that have been highlighted this past year, and the emerging risks associated with new technologies in an ever-increasingly connected world. This year, we will look at the insurance industry through the lens of powering the recovery. How can the decisions we as an industry make influence how the world moves forward? I'm excited to introduce Kurt Strovink, who will host a group of experts to provide insights in these critical and timely topics. Joining Kurt from all over the world today will be Quailin Ellingrud, Violet Chung, Sylvan Johansson, Bernard Kotanko, Pradip Patayath, and Ari Labarakian. Welcome to all of you. Kurt, over to you.
Well, thank you very much, Josh, for that introduction. And we're thrilled to be here as part of this conversation. And we thank the IIS for the opportunity to share some of our views on the insurance industry and to be part of this important meeting. I am joined today by a number of my colleagues from around our global firm. And as we thought about the way that we might convey some views that we have about the insurance category, the opportunities, as well as chances to meet those opportunities, we thought one of the ways to do that would be to hear from different members of our global insurance team across Asia, Europe, and the US. And so one of the things that we'll be doing today is talking about impact challenges that we see for the insurance category. And we've decided to tell that story in terms of 5 impact challenges that we'll step through in a moment. We've also chosen to share some innovations that we see in 5 areas that meet some of those challenges as a way to parse through what are, a diversity of trends throughout the world. And then we'll also end by talking a little bit about the role of the CEO as a change agent in making some of these big moves happen in the insurance category going forward because of the opportunities that are there. So that is our approach. What I'll try to do as we step through this is do a little bit of MC or hosting on the people that are sharing points of view just to make this a bit more continuous. But we hope that the conversation will be helpful to you, most importantly. So with that, I might introduce our first speaker, Bernhard Kotanko, who leads much of our work in Asia in the insurance practice here, and will also share his views on these 5 key impact opportunities in the insurance category and challenges that need to be faced going forward. Bernhard?
Thank you, Kurt. Throughout its history, global insurance has proven resilient and reliable as a partner for policyholders, customers, employees, and overall society. These are indeed, again, unprecedented times, and the insurance sector will again be forced to face severe challenges. All these challenges are interconnected, and by addressing them properly can turn into tremendous opportunities for the sector to create more value for the society overall. So let's dive into it, and let's start with economic profit. As a viable industry, it is critical to earn your cost of capital. Our analysis shows that over the past 10 years, the insurance sector has struggled with this and has hardly earned its cost of capital. P&C carriers and brokers have fared better, but overall that is a challenge. And it is also recognized by shareholders who increasingly look at ROE as the dominant driver for their decisions. So while a lot has been done in the sector, we see it as critical to really think about how the sector can enhance its overall value creation. Let's now dissect some of the parts of this value creation, and let's start with the top line. Overall, the insurance sector has barely outpaced global GDP growth. And that is surprising because at the same time, we all know the studies about the insurance gaps, the protection gap, health gap, retirement gap, etc. So what has really led to the case that policyholders actually are cautious about buying insurance? Well, there are demand and supply driven challenges, but the one we really want to call out is that our surveys indicate that many customers still don't understand insurance. They wonder, why do I really buy this? Why should I trust it? There is a lack of understanding of the culture of protection. And unlocking this through new ways of engaging with customers, through engaging in ecosystems will be absolutely critical. So that is on the demand side, what we want to call out. On the supply side, on the way we operate as an insurance company, insurance is still a highly integrated value chain. And while there have been a lot of efforts to improve productivity, cost efficiency, it is telling that when we look at the long term over the last decade, the insurance sector has actually not been able to improve its overall cost efficiency when we measure total cost relative to the revenue in the sector. There are many drivers to this. Labor productivity actually went up and improved, but at the same time, these improvements were offset by higher cost in technology and governance. So while we all are tired of cost efficiency programs and the future cannot be more just cost efficiency, there is a question of how you transform operating models to really advance the productivity in the sector. Challenges 4 and 5 now focus on more the outside world of insurance. And of course, we need to talk about the implications in a post-COVID world. We feel that insurance has a tremendous opportunity to really reimagine how this customer proposition that we talked about can be developed in the future, but equally how insurers create an employee promise that attracts the best talent and new talent that is needed for the future of insurance. Let us look at some of the trends which insurers will need to face. The first is around remote work, how to live in a virtual life like we have this conference together. We believe that work from home is here to stay. We believe that business travel will be reduced. Of course, it will come back, but not to the prior levels. And that will change the way insurance acts globally and how to engage in its operations. Secondly, e-commerce and any form of digital business is here to stay and continue to grow. And that is a huge opportunity, in parts also a challenge for insurance. It will challenge a lot of the face-to-face distribution that needs to shift more towards digital hybrid models. It will also increase the opportunities to really expand the role of insurance. For example, when you think of telemedicine and the role insurance can play to really be a partner for healthier lives. And finally, we talked about productivity, and we strongly believe that automation adoption, cloud infrastructure, and other new technology can really reinvent the core of the operating model of insurance. And finally, there is a much bigger question. There is a much bigger question about the role of insurance in society. Many businesses wonder what is their purpose. Many shareholders and employees wonder about that even stronger. And that is a huge opportunity for insurance if you get it right, because insurance can really cut across all stakeholders and create a holistic purpose. Let us look, for example, at some analysis around health and healthcare. If insurance really is partner in improving the healthcare sector, what is possible is to improve hundreds of millions' lives, to get better in preventing diseases, to get better in care management, and of course, to improve the financing of the health system. And health is just one of those areas. We could equally talk about climate risk or other areas of sustainability, and we'll hear more about this in a minute. So overall, those 5 challenges, we call them challenges, but they're equally opportunities. But foremost, they're a call of action for the global insurance sector to really drive tangible change.
Thanks very much, Bernhard, for those overviews of the areas of challenges, and as you said, also opportunities for the insurance sector. Very much appreciate that. Maybe we'll pivot now to talking about some of those opportunities to capture a real value in this area, particularly on sustainability, our first topic. And I would like to introduce Sylvain Johansson, who's my senior partner and colleague in Geneva. He is based there, and he also leads our P&C practice in Europe, as well as our sustainability practice globally. So maybe with that, Sylvain, could you enlighten us, particularly for CEOs, how we should think about meeting the sustainability opportunity and some of the things that you've seen there that you think are particularly important for this group?
Thank you, Kurt. It's true, insurance CEOs get lots of calls for action on sustainability, and that's from multiple fronts, from regulators, from rating agencies, from shareholders, from boards, from public perception, activists, and also, of course, from clients and employees. So there's an increasing need to act. And we believe that announcing a long-term aspiration, reducing your own carbon footprint, and even promoting sustainable investments are a good start, but they're way not enough. So how should an insurance CEO think about his or her climate strategy? The first axis is about setting an ambition and working to make it coherent and compatible with the purpose or with the existing values or with the existing ESG strategy. And it's also about acting responsibly and committing to reducing their own Scope 1 or Scope 2 emissions. The second axis is about safeguarding the business performance. And as we see with number 2, it's understanding the exposures on both sides of the balance sheets. And that's true for physical risk, for transition risk, and for liability risk. And often there's a lot of emphasis on physical risk, but equal attention needs to be on transition risk and liability risk. And then, as we see with 3 and 4, one needs to adapt how you underwrite and how you invest. The third and final axis is tapping into opportunities. And on the asset side, that's deploying investments in sectors that will grow and gain from the massive decarbonization efforts. On the liability side, there are all kinds of new services to develop beyond risk transfer, but also there's innovation risk transfer, especially for all the decarbonization technologies. In general, carriers are least advanced with respect to sustainable underwriting, even if some are leaning forward, such as the Net Zero Insurance Alliance. And it cannot be that an insurer invests sustainably and uses all kinds of sophisticated ESG scores for all their financial securities, while at the same time, they're not being coherent or equally detailed on the underwriting side. So what does it mean? In the same way, earnings, capital, cash flow were the key portfolio steering dimensions so far, the insurance executives will need to add a fourth dimension, and that's the carbon intensity on the underwriting portfolio. And from that point, there will basically be 2 postures. The more reactive insurers will wait and assume that through the underlying decarbonization of the economy, their underwriting portfolio will gradually trend to net zero. The more proactive ones, however, the more proactive insurers, they will track, measure, and take continuous management actions to also steer the portfolio they insure for carbon. An exciting but very intense journey ahead.
Thanks very much, Sylvain, for those comments on sustainability, and in particular, the importance of that. I know it's a rising topic across the firm and in our council to CEOs. So thank you for that very much. I also want to now pivot to a second area, a value lever in the area of digital and digitization and data and cloud. And I'm joined by Pradeep Pathayath, who is my senior partner colleague from Chicago, where he leads much of our digital work in insurance and also more broadly in financial services. And so with that introduction, Pradeep, perhaps you could share with us some of the thoughts of what you see, particularly around digital and insurers' adoption of digital transformation and some of the organizational maybe requirements of being able to get that done in the right way.
Thank you, Kurt. Now, I'll start by perhaps just saying that insurance at its core is primarily a risk, data, and tech business. That is what insurance is all about. And it perhaps wouldn't be much hyperbole to say that there are few items that are value creating or destroying for the insurance industry than the forces at work around data, tech, and cloud. If you look at this slide and you notice the adoption rate that has accelerated dramatically across all countries, China being, of course, a primary huge accelerant in the recent decade, that this is not hyperbole. As Peter Diamandis notes, in the next decade, he says, we will experience more progress than in the past 100 years. Now, why is this? And if you actually look at some of the primary forces at work from our think tank, here are 10 that actually are primarily and hugely noteworthy. Process automation and virtualization, the future of connectivity, distributed infrastructure, so moving away from centralized computing to nodal computing and edge computing, Next-gen computing, as many of you have read in newspapers and magazines, quantum computing can process data and numbers at a rate that is hugely and vastly superior to the technologies of today. Applied artificial intelligence, things like computer vision, natural language processing, speech technology. The future of programming, as one of the leaders at Google basically said, software that writes itself versus humans having to write software. Trust architecture, primarily underpinned by things like blockchain and distributed ledger technologies. And then, of course, there are industry-specific trends like biorevolution, next-gen materials like nanomaterials and things like that. And then, of course, as my colleague Sylvan noted, sustainability and clean tech and the impact that this will have around it. And when you look at some of the impact characteristics of these 10 trends, they're quite staggering. In the next 10 to 30 years, it is entirely conceivable that 80% of the 7 to 8 billion or whatever the population is by then of the world would be reached by very fast 5G-like technology for connectivity. That essentially quantum computing will basically be largely at full scale by the middle of the next decade. So these are just gargantuan forces at work that will hugely impact this business that's centered around data, technology, and risk. And so then the point then is about why value creating and why value destroying. And this is the noteworthy thing. Companies that basically harness some of these forces around data, technology, and risk will end up creating new businesses much faster, will end up operating at a speed and agility that is remarkably superior to those that don't. The customer experience characteristics, it's been studied, will be vastly superior for those that use data and personalization versus those that don't. There's a complete rewiring of operating models that's possible, where labor will largely be substituted by technology and decision support using artificial intelligence and techniques like that. Those are companies that do this well, will create huge value. And on the converse side of it, companies that actually don't risk actually getting hugely left behind, leaving huge potential in terms of businesses they can create, leakage of talent, cyber risks that embed when you're not using some of these techniques and technologies powerfully. One of the things that actually, in particular, is this notion of cloud. There was a big debate for a long time whether financial services companies and insurance in particular would embrace technologies like public cloud. And if you look at the data, I think when we did a most recent survey, 80% of folks switched pre-COVID to basically saying they would never consider or would very unlikely to consider you going into a public cloud, to now the same survey says 80+% of CIOs and executives in the insurance industry basically say they are seriously, actively, or definitively considering using the public cloud. So a huge shift in just a matter of a couple of years, in fact. And as many of you know, this is reflected in the numbers that the industry sees. The industry is seeing a 30% plus per annum growth in terms of public cloud service revenues and adoption. So when I said at the beginning that it wouldn't be mere hyperbole to think about some of these forces at work being massively value creating or massively value destroying for the insurance industry, some of the early evidence would quite support that thesis. And obviously, there are already examples of big winners in insurance and people that are starting to use data and build an AI and artificial intelligence and decision support systems on top of that. And they're actually starting to see better loss ratios and improving trends in terms of loss ratios, distribution costs, and the like that underpin the primary economics of the insurance business.
Thanks very much, Pradeep, for that, and particularly for reminding us just how fast this digitization trend is occurring, and cloud as well, and how that's been accelerated, I think, also by COVID. Thanks very much for sharing those things with us from Chicago. I want to pivot now to Quaylen Ellengrud, who is going to talk about another fast-moving trend, around culture, way of working, and diversity, especially in this environment we're living in. Quaylen is a senior partner from our Minneapolis office, and she also leads our life insurance practice in North America. And she is one of our leading speakers on a number of topics around culture and diversity in the firm, and has been widely quoted. So we look forward to your comments, Quaylen, here as well, and sharing in particular what you think CEOs should know about these set of trends and some of the opportunities for carriers as part of them.
Thank you, Kurt. We know that diversity, equity, and inclusion matters. Diversity in terms of our diverse leaders there across the leadership team, across the organization. Based on research that we've done around the world, ethnically diverse teams are 36% more likely to outperform from a total returns to shareholders perspective than non-diverse teams in the bottom quartile of ethnic diversity. Gender diverse teams are 25% more likely to outperform. Inclusion also matters, and we've seen employees increasingly willing to walk away from an opportunity or not interview with the company at all if they don't perceive the leadership team and the culture to be inclusive. So younger employees are about 2 times more likely to raise the need for inclusion, and almost 40% of global job seekers have walked away from an opportunity. Equity, there in the middle, in terms of outcomes, are also important. Employees who perceive the talent processes to be fair are 3 times more likely to want to stay with their current company and recommend their company as a great place to work to others. So diversity, equity, and inclusion matter. But we know that over this last 18 months of COVID, with many countries in very different spots, COVID has affected women as well as diverse employees, much more so even than others on average. And there's broad diversity within that. And so how do we think about the return to work, but the return to the workplace as an opportunity to really accelerate how we include diverse groups across leadership teams, across organizations? One of the things that leading organizations have done is really gone on the offensive to use this as a once-in-a-lifetime opportunity to reimagine what return could look like, not to go back to the same old, but to really reinvent, and reinvent across a few different dimensions here. The first is around productivity. It's interesting, a number of leaders have asked me, well, how do I know if I don't see my employees in their seats? How do I know if we're being productive? And I asked, well, how did you know that they were being productive before, right? Hopefully it wasn't just because they were in their seats and you assumed they were doing good things. And so getting to deeper productivity measures, outcomes, deliverables, what are we actually working on here that adds value? That's been a real game changer. We have seen an increase in productivity. We've also seen an increase in stress and hours worked, but productivity has increased largely in most industries and within insurance across the board there. We've also seen talent as an opportunity. Now that geographic barriers are somewhat lifted, how do you use talent and recruiting to look for tough to find talent, analytics talent, digital talent, diverse leaders across the board? And so using this as an offensive retention play has been important. Actually, in an article that we just released today, employers have found that about a third of employees are leaving, and they're actually leaving without another job in hand. They're just saying, you know what, some of this is not aligning with my purpose, to our conversation just earlier, and I want to look for a new job. So I do think that attrition is going to heat up and get a lot tougher before it gets better, especially for diverse leaders. Efficiency in terms of digital enablement, collaboration, but then culture. Culture has been an important one. And I think some leading organizations are thinking very proactively about what is the culture that we want and how are we going to build that in proactively as we return to the workplace. Some companies actually have created a culture calendar across the year, within each quarter. When are we getting together in person? When are we going to reinforce our culture and our values? We've even seen some companies approach the return to the workplace as a real planning. They're sort of treating it as an offsite, right? The office as the new offsite, and thinking about, how do I plan for the natural interactions that I want to happen? How do I plan for creating an environment that is attractive to workers to come back to? So that has been a real challenge as return to workplace teams think about this new normal, right? What does the space look like? What do the interactions look like? What does the flexibility look like as more and more employees, in fact, up to 70% of employees saying that being able to work flexibly, at least part-time, is a top priority in selecting their next job. And finally, what are some principles that leading carriers within insurance, but also more broadly, are using as they plan this return to the workplace, hopefully with an eye to increasing and accelerating diversity and inclusion? They are being quite deliberate versus drifting back, deliberate about how they plan their days, their weeks, interactions. Some are saying, we know that stress has been high, mental health needs have been higher than before. And we want to make sure that employees have days off, coordinated days off, time to kind of disconnect. We've also seen some organizations say we want meetings to be 25 minutes and 50 minutes so that there is a chance to take a break in between meetings if you're not in the office. And if you are in the office, to catch up naturally and talk with others and build those mentoring and sponsorship relationships that are so important. Measuring what matters, getting to the bottom of productivity and the outcomes that are going to make a difference to the business and to customers and policyholders. Capitalizing on the learning opportunity has been another theme, and making sure that you can test what is working, but then pivot really quickly if something isn't working. But how do we approach this in a data-driven way? And then finally, framing this as our change. This is our future of work to evolve to reinvent together, and keeping a very open line of communication with employees about what's working and what's not framing the return to work as the final answer, but this is phase one. This is what we're going to try. We're going to listen to you to see what's working and adjust as we go in a data-driven way, but also in a very nimble way. Thank you.
Thanks, Quaylen, very much for those comments, and also for reminding us just this is a moment defensively around many things around attrition and culture, et cetera, but it's a huge offensive moment for those companies that are pursuing it that way. And I think that framing recalls what Bernhard talked about in the major challenges at the outset, that these are challenges, but they're also opportunities. So thank you again for those comments. I want to come now to Violet in Hong Kong, who's a partner of ours there, who does a lot of work in digital and analytics for financial institutions more broadly, and runs that part of our firm and practice for Greater China and Asia. So thank you, Violet, for being with us. We look forward to hearing some of your comments, particularly around customer experience, which is another one of the areas that we thought was particularly important to highlight. So without further ado, over to you on your thoughts for the CEOs on that topic as well.
Thank you, Kurt. So the topic of customer experience is not something new. We've been talking about it in the past decade. But I think it's extremely important, especially in the post-COVID world. Insurers are facing with interconnected challenges today. They're shifting consumer requirements. Essentially, consumers have different expectations of how they engage with insurers today. In fact, in our survey, it shows that interactions with insurers has very, very low frequency. It ranges from 1 to 2 times a year to 15 times a year. Whereas comparing to other industries like e-commerce player or players like Facebook, is multiple times a day. So how does insurers think about their interactions and their relationship with consumers? In another survey that we did, customer satisfaction for insurers traditionally is lower than even financial services. So how do we address that and really reinventing our experiences to consumer? On top of that, there's also regulation changes. So there's pressures of new laws, which includes on how we think about consumer data, how do we think about privacy, also interest rate changes. There's also technology developments, which my colleagues spoke about. The technology from AI, from cloud, from automation, this is really changing the way of how insurers should be thinking about reinventing their capabilities. There's also new competitions from attackers, many of which are internet natives, that's reinventing and redefining their relationship with consumers on insurance. So with all of this, what should insurers do? And this is really, really not just about the engagement layers of consumers. This also has to do with how insurers should be thinking about reinventing their end-to-end proposition. Some of this actually go as far as the need to build new ecosystems. And ecosystems help insurers to rethink their value proposition, reinvent the service delivery, thereby refinding new levers for value proposition and also advancing their business model. So insurers really need to reinvent the core capabilities. And from this, we think about broadly 3 different layers. The first is really personalize every aspect of customer experience. So this has to do with shifting the relationship from product to the broader health management, life management. This also has to do with the capability around, how do we reinvent underwriting capability? How do we do a personalized omni-channel customer journey that's, micro-segmentation based? This also has to do with, developing new flexible product solutions that's actually fitting the new regulatory environment and also the interest rate environment. So there's new shifts on how we should think about product beyond just product, but really the value-added services and also non-monetary benefits that is value-adding to consumers. And lastly, this has to do with how insurers should be thinking about reinventing their skills and capability, right? So this actually requires a different set of skill workforce, which my colleague Quayleen just talked about. This also has to do with, thinking about how do we build different building blocks that's actually quite agile in the way of working, that's actually quite different in terms of how we think about the speed to respond. So what are the value creation and value added services as we think about reinventing some of these capabilities when it comes to consumer engagement and also benefits for insurers? So if we look at the next chart, you'll see essentially there's 8 broad benefits that we think, both to the consumers and also to the insurers. The first is really by reinventing these capabilities, it helps the increase of access and convenience, right? So seamless experience for consumer, end to end, that's going to lift up customer satisfaction by 10 to 20 points. So pretty significant in terms of impact. This also means that, obtaining mass customized personal offerings, right? A lot of this is actually enabled by new data sources, new sources of insights that we get via partnership and by creating new proposition. The third benefit is really enhanced benefit on cost of serving and also lower cost of acquisition. Again, this is really being able to customize the proposition and how we think about the omni-channel strategy for customers. This also helps in terms of getting the customer the product in the moment of need, right? So how do we tailor our proposition so that it's more micro product, it's also more scenario based, it's also more life stage based, right? So customers think of us at the moment of need, and we're actually value adding in those moments of need. In terms of the value creation to ensure, this is really also helping to strengthen the core businesses. For example, typically we see that this helps on 10 to 15% increase in sales conversion and also 20% uplift in terms of cross-selling. This also helps insurers to tap into new sources of value where traditionally it's not enabled from traditional business models. This also helps to fundamentally change and shape the relationship with customers. So we're not disintermediated by other channels. We actually own the customer's engagement. We actually have a more personalized and warm relationship with customers. And last but not least, there's in several markets, new propositions like this actually helps insurers to get higher market valuation, which is a new sources of value creation. Back to you, Kurt.
Violet, thanks so much for those thoughts on customer experience and the changing nature of customers during this period of time. And thank you so much again for joining from Hong Kong. I'd like to move next to Ari Labrikian, who is one of my colleagues in the New York office, and he is also the global leader of a business building approach that we have in McKinsey called LEAP. And we invited him here today, partly because he does much of his work in insurance, but he also leads Leap globally for the firm and has done a lot of businesses, building for businesses across sectors. So I would love to hear, Ari, and maybe for you to share with the group, what you see as some of the critical ingredients of those carriers that have an opportunity to build new businesses to complement some of their existing, the work that they've been doing for a number of years. What's different now?
Thanks, Kurt. The topic of business building has gotten very, very high priority across industries nowadays. And what's different is companies are starved for growth, and they're getting ever more creative across industries to find that new source of revenue, that new orthogonal business that adds to the product portfolio. And insurance is no different. Carriers around the world are looking for new growth opportunities, whether inorganic or organic. Our research has shown that business building businesses under the portfolio of a corporate, has risen to be a top 3 priority for more than half the executives out there. And that number is only going up during COVID times. The problem is business building for large corporates is very difficult. The success rate is something in the teens, depending on how you measure it. The reason is the large company executives are very good at running large companies. And that's a very different skill set from building new businesses and doing the entrepreneurial thing. However, that small percentage of companies that figure it out, whether it's building a direct digital attacker, or it's building an analytics platform-based business, or it's building some other type of business, those winners see outsized share of revenues come from these new businesses. So the rewards are attractive for those who can figure it out. We did a deep dive on, well, why do something like 80 to 90% of these fail? What are the common failure modes and what's driving this? And we found 6 main reasons. The first is large companies, when they launch a new business, they need to be clear on what their incumbent advantage is. Why would they win versus all the other startups that may be out there trying to do the same thing? And not being clear on that, whether it's data or assets or technology or people or brand or what have you, is a reason for creating risk and ultimately failure in business building. 2 is slow starvation, we call it. Business building requires a lot of capital and a lot of talent. There is no cheap and low talent path to building a large, highly successful business. And management teams need to have the discipline of continuing to fund these things as certain markers are met over time. 3rd is expectation management and the misalignment. How you measure the progress of a new business being built is totally different from how you measure the progress of a mature business. In fact, you don't look for revenues and earnings in the early days of a new business. You look for other things. Do I have a team? Do I have an MVP of the product? Do I have a good product market fit? Do I have good feedback from customers? And those are better indicators than any revenues in the early days that this thing is going to work. The last 3 reasons I'll combine into one, which is culture. The culture of large companies tends not to be the entrepreneurial test and learn agile culture that is needed in these new business builds for them to take off. So what are the keys to making this all work? Well, a few things. The first is CEO, top team, and board commitment. Building a new business to drive outsized growth has to be a top priority that is discussed at the management team level and is visibly and consistently supported by the CEO. The second is obsession with value over any ideas or shiny objects. The goal here is not to build a great website, to build an app, to get a press release out. If that were the goal, everyone could do it. The goal is to create outsized value. How do you build a business that's going to meaningfully add revenues and value to the portfolio of the corporate over time? And that's the goal. 3 is this culture point we talked about, an agile test and learn culture, one that moves quickly, pivots quickly, learns from failures, rewards risks being taken when they're the right risks, and there are learnings from the failures from those risks. That's what's needed culturally. The 4th is open architecture capabilities. In today's world, no one company is going to fully build and contain and own a successful at-scale venture. The solution will always require partnerships, JVs, acquisitions, in addition to building and having some of that secret sauce internally. And how you build that mosaic of capabilities in combination with partners outside of the company is critical. Fifth, balance between organizational freedom and corporate support. That's a lot of words to say, keep this new thing distant from the core to give it space to grow. At the same time, build bridges so you can leverage those assets we talked about. And then finally, performance management in a dynamic way. How do you evolve what you look for quarter to quarter, year to year, so that you're looking for the right things? We find in every industry, and in insurance in particular, where some of these legacy technology, legacy process, legacy mindsets are in place, it's quite important to put in place these new ways of working, new operating models, new mindsets for a new business to really take off and scale. Back to you, Kurt.
Thanks again, Ari, for those thoughts and comments on business building. And it's just remarkable how much this has taken off, both in the insurance category and more broadly. So appreciate you sharing some of those thoughts. I know this is often a next step to strategy thinking for many companies, and also a really big growth driver for those looking for growth, as you said. So thank you for those comments.
Yep.
We wanted to turn now to a final topic, which is the role that the CEO plays in engineering some of the change that we've talked about under the challenges and opportunities that Bernhard laid out, and then a number of our other speakers discussed. Because many of these things require profound change in organizations to happen, and the role of the CEO, we believe, is particularly important to having impact in these areas. So what I wanted to do was stepping back from this to talk about, there are many facets of CEO roles, and many of you will know those naturally as acting CEOs. But we find that 4 are particularly important, we believe, for this moment in the insurance sector more broadly, especially when thought about against the backdrop of digital sustainability, some of the changes in customer experience, culture, diversity and inclusion, the way of working, and business building. These are areas that require a different kind of leadership from companies, and so too, therefore, from CEOs. The first of these 4 we often talk about is as a CEO as the chief calibration officer. And what we mean by that is it's actually not so easy to go from being an average performer, maybe in a category, to being really one of the standouts over a period of time and over 10 years. In fact, the unassisted probability of moving from about the middle of your categories to the top quintile is about 8% for most companies. And in our industry, it's about 12%. And often the things that get you there, we've analyzed this in a variety of ways, have to do with key markers of strategy that need to be in place. And there's many paths, but often they're common ingredients. And this includes things like dynamic resource allocation, step function change in productivity, thematic M&A, and doing that with enough velocity to really matter. And there's a variety of other aspects or markers that we consider important for high-performing companies over time. And the CEO plays a particularly important role, in our view, first, in being a calibrator of whether the organization is doing enough against those markers to really distinguish themselves from peers. And we think that there are many people in the organization that will be familiar with some of the key elements of strategies and will say, we're doing this, boss, it's underway, it's in the project plan, et cetera. But the CEO does have an undelegatable responsibility to judge the pace and speed of that execution and whether it's sufficient, whether the world is moving faster than the company's moving, or is the company moving faster than the world's moving, and to ensure that the latter is happening. So the first thing that we think about is particularly important in the CEO role is, as we called it, the sort of being counselor, being the calibrator in chief, or the chief calibration officer. The second aspect is being a driver and enabler of horizontal change across an organization. And why is this important? This is important because digital and analytics, as we've talked about before, are very cross-company goals. They require a lot of work to actually have the organization as a whole adopt them and adopt them consistently. We talked about business building with Ari and the importance of actually creating ways to incubate businesses inside of organizations, and maybe even create incentive structures that allow those organizations to thrive in new business areas, to fund them and not to die. The slow starvation that Ari mentioned, those are things that often need to be enforced and reinforced by CEOs to get a chance to really succeed. So the second area of CEO leadership is around driving and enabling what we're calling horizontal change. And that's a second key role that we see the CEO playing. A third is really selecting and deploying what we call a transformational recipe, a way to change the fundamental speed, pace, and execution, the metabolic rate of your companies. Standard business as usual has not been sufficient in many aspects of the insurance category. And we don't believe that doing things the way companies have done before will succeed on its own. There needs to be an upshifting in tempo. The CEO often plays a role in being able to do that, but not by fiat. There needs to be real method. There are ways of thinking about transformations and doing them in a disciplined fashion that now are arising in our category. And over the last 10 years, we've been working with a number of companies with particular methods, one of them being something we call reset, transform, sustain as one example. Ways of effectively countering a lot of the collection action problems that you get in large organizations about speed and pace of ability to execute. And this execution is particularly important and something that CEOs play a third major role on. But it's about choosing a transformational recipe that works in their context and not accepting the standard execution rhythms of BAU. And that's a third role that we see for CEOs. And the final and fourth one is really owning the narrative, the CEO narrative, and exploiting the potential in the CEO role of the storytelling capability of CEOs. And we think that this is, in some of the best CEOs we know, we notice that there is a clear story, a story almost of identity for the company that comes about. Sometimes it takes a year or two to develop for CEOs, but some of the best ones develop their own vocabulary. They might have their own words, terms that they put meaning into, so that the people in their organizations have a certain mindset that approaches the way they work. And it also appeals to a number of people who are looking for an abiding purpose in the kind of work they're doing for their companies. So this fourth area of, I'll call it meaning making, but it's through communication and it's through language, and often a proprietary language that is unique to that CEO. We find that to be a particularly powerful thing. And so if we were to step back from everything we've talked about and say, what are 4 roles that CEOs can play to unlock the full potential of the CEO role against the kind of opportunities that we've been talking about in the last 40 minutes? It would be that chief calibration officer. It would be the driver of organizational and horizontal change. It would be choosing a transformational recipe, and it would be thinking about and crafting and then sharing again and again a compelling story of change and owning that narrative. So in conclusion, as Bernhard mentioned, there are a number of challenges that face the insurance industry globally, but I think we remain optimistic. We believe in this category and its ability to respond. And we think that successful responses and winning strategies are going to involve many of the topics that we've talked about in this discussion, whether it's sustainability, culture and ways of working, and diversity, new business building, ability to shape customer experiences and ecosystems, and some of the acceleration that's happening in the digital, data, and cloud domains. We believe that successful strategies will engage many of these areas in the future for those companies that will be winners. And we also believe that the CEO plays a unique role in this, and in particular has some undelegatable responsibilities and opportunities that the rest of the organization on its own can't fully fulfill. So I hope this has been helpful. Our colleagues and I thank you very much for this opportunity with the IIS. We, on behalf of all my global partners, we thank you for giving us an opportunity to speak to you, and we look forward very much to continuing the conversation. Thank you.